Hey folks, Dan Frio here, the rate update, and we're going to recap what today's markets look like and what my thoughts are for the week. So let's get on to it. What is the stock market doing right now? Not good. We're out of the gate this morning, and it is January 11th, 2021. Dow is down over 100 points, S&P down 20, NASDAQ down 100, and the Russell 2K is down 8, and that's basically about a 0.5% drop across the board. We can kill two birds with one stone here. You can also see the crypto market. This is my alternative investment. It is getting pounded. But the crazy thing is, and I'll get to this in a second, it's still for the week. You can see it lost 200 billion, wiped out in the last 24 hours. Still for the week, there's a gain. But let's get on the stocks. What's going on with stocks? Here's my prediction on stocks. I still can't figure this out, and I'm fully vested, just for your information, and I'm not a financial planner. I just do this. I'm giving you my thoughts, my personal thoughts behind all this. This is not financial advice. I'm just trying to recap to you guys, just give you some news, what's going on in the market, and then talk about my assets, where I'm allocated, why, and kind of go from there, just to kind of educate you. The channel is going to be broadening, my YouTube channel, to basically assets. And I am in the real estate environment. I'm a mortgage lender, have been for over 33 years. So, real estate's a big part of the assets basket that you should have. But the other things are stocks, bonds, and alternatives. So let's get on to that. So you can see the stock market out of the gate isn't doing very well. The one good thing, and I can't get it, is it's still overbought. Meaning, if you go to, there's a fear and greed index, and it tells you how many people are buying, selling, and kind of where the things are there. We're still in greed mode. And I don't get it. And here's the reasoning behind all of this. We have employment numbers came in last week. They're terrible. They're worse than expected. We expected a gain of about 60,000 people. We had a loss of 140,000. Just think that's a reversal of 200,000 people. The restaurant and entertainment piece of the business is getting crushed. But then the flip side of that is every week we keep getting record gains in the market. And just based on the information I'm going to give you here, the market's overbought, and it's going to correct. It has to correct. The only thing going our way is the stimulus package. Everybody is hell bent that the stimulus package is going to fix the whole world. It's going to put a Band-Aid on something. But when you borrow the money, and you borrow it in the extent that we're borrowing today, it's going to patch the problem today. So you got a huge pothole, and they come by and throw some of that stuff in there that fixes it for about a month or two or three, and then all of a sudden there's stuff all over the street and the hole's back. And it's worse than we were before. I'm not saying that, but I'll say it. I think a lot of this stimulus stuff is going to fix the economy short term. Long term, we're in for some major hiccups. So I'm being very cautious in that area. The next segment of the business is bonds, and bond yields are going up. And that's one of the things that are pushing people out of the crypto market. And that, along with, we've doubled, most of the crypto coins have doubled in value in the last 4 weeks. So, but here's what we got for the Treasury and the bonds. Bonds can continue to move up. The Fed is stepping in and buying bonds, as well as they are buying mortgage-backed securities to keep mortgage rates down. So that being said, but I see a steadying of the 10-year Treasury. I think we're going to cap out right in these ranges right here. It's not going to move much. The MBS market is getting crushed right now. Let's see our markets reviews. Oh, I am on the front page. So the MBS market is down 12, as we know. When the MBS price, and that is the price. When the price is down, which we are right now, that means rates are going up. We've had a major move in the last week with mortgages. Mortgage rates are up probably a quarter to a half a percent this year, and it's only the 11th. So that's what's going on with mortgage-backed securities. The 10-year Treasury is up. My thought is this is going to stabilize right now in about this range, and I don't think this bloodbath is going to continue on the mortgage-backed securities front because the Fed is basically hell-bent to keep rates low, especially with mortgages, and that's one of the things really helping the economy right now. When these forbearances start to pop, that's going to be a whole nother avenue of things. What the forbearance is, if you had a mortgage, what the government came out with last year, they worked with a lot of the banks and entities in the mortgage fields, and they came out and said, you know what, if you're having some hardship, you can not make mortgage payments for say 3 or 6 months, or some even went to 12 months. When they say not make them, they basically are saying we're going to halt them for now. And we'll pick them up at another time. At that other time, that's starting to come due, and when that comes due, it's going to be another fiasco, because what's happening in a lot of cases is when that mortgage payment starts or reactivates, most of the banks want you to bring your account current. So let's say, for example, you missed 6 months mortgage payment, and your payment's $1,500. After 6 months, they want you to start making your mortgage payments, plus bring the account current. That's a lot of money. I mean, that's a ton of money you're going to have to come out of your pocket. And I have ideas on how to make sure that you don't fall into that category where you can look to refinance. And I'll have videos on that all week. You can look to refinance and kind of just start over again. I guess that's the best way I can put it there. Economic news for the week. There's really not a ton of stuff coming out. But the big thing that we're going to face this week or see this week is Federal Chairman Powell right here. He's going to talk on Thursday. That is going to move the markets one way or another. Most of the week we just have inflation numbers right through here. You can see that on Wednesday. Retail sales and other indexes coming out on Friday. So basically between Wednesday, Thursday, and Friday, we're going to just see what's happening with inflation. I don't see inflation getting out of hand. It can be based in certain sectors of the market, but overall, guys, people aren't working. So there's not a ton of goods and services being produced right now. The biggest area of inflation is logistics, meaning just getting products there, because a lot of people are buying online and a lot of stuff is getting shipped. So if you buy stuff on Amazon, you're used to getting it that day or the next day. Everybody's kind of getting ticked off. There's like, it's taken 3 days to get here. Well, because a ton of people are buying online things. But the entertainment area of the markets and leisure, hotels, restaurants, events such as concerts, sporting events and everything, they're getting crushed. And I don't know when that's going to end. The vaccine is coming out. More and more people are getting it. So as that progresses, the economy will start to come back a little bit. But also, again, let's watch. There's this stimulus package is the only silver lining in this whole thing that we're seeing. What you're going to start seeing with that is, again, the government overspending again, and you're going to say, well, they need to do something right now to fix this. Yeah, but there's probably a better way to go about that. And I'm not going to get into the political side of things. I'm just saying when they pump out, a $900 billion package or $1 trillion package, guys, it's not free money just created out of the air, just distributed to people. It's a loan, basically, because the government has no money that they're passing out to everybody, and then eventually that loan's going to need to be paid back. How is it going to be paid back? Higher taxes. and it's going to go across personal and corporate. So when companies have to pay higher taxes, prices are going to go up, and then it's a vicious cycle. You just watch in the next 6 months to a year, everything's it's gonna turn, and we're gonna come back. We're strong. We're America. 2, 3, 5 years out, you'll watch. Rates are gonna go up. Taxes are gonna go up, and that's not a good, healthy thing over the term. But we got to get through this, basically this economic sickness that we do have, and so let's fix it now and maybe worry about it down the road. And that's what happens most of the time, unfortunately. What else today? Cryptocurrency, my alternative investments. So a lot of times what we're going to talk about on this show as we move and grow this channel is that we're going to talk about stocks, bonds, other investments, such as real estate, cryptocurrency, and then we're going to dig into 401ks and different kind of retirement plans. We're going to talk about taxes, maybe some tax benefits that you could have, just a lot of things. We're going to grow and grow and grow the channel, so bear with me. Some of my topics right now are going to be somewhat generic, but as we progress through 2021, the channel is going to grow and grow and grow and elaborate more in these topics. More specifically on a weekly basis. Meaning, next week we're going to have walking through the mortgage process, how to start or get into real estate. The following week we're going to talk about the stock market or different investments, the difference between what is a stock, how do you buy into stocks, what are ETFs, a whole bunch of things like that, and then alternative investments, talk about retirement plans, talk about insurances, and a whole slew of things to educate you guys, not selling anything, but to educate you guys on just this stuff to help you manage your money and your portfolio much better and help you grow your assets and get to a point where you can sit back, hopefully, and retire one day and relax a little bit. But that is it for today. I will be doing the mortgage update or the rate update later this afternoon, and I'm not seeing much good news on that front with mortgage rates, but only time will tell. So thanks for watching, and I'll be back later this afternoon with the rate update with Dan Frio.